Welcome to this edition of Bloomberg Tech Asia. Today, we'll focus on India as it bets tens of billions of dollars on artificial intelligence. Real estate consultant CBRE sees investments in India's data center industry topping $100 billion by next year. Yotta Data Services, which runs the nation's largest cluster of NVIDIA AI processors, is planning to invest billions more. Joining us now is the company's chairman and co-founder, Darshan Hiranandani. Darshan, really good to have you with us. I mean, you're already making billions of dollars of capex commitment for this year alone. How confident are you that the demand is actually out there to get you a good return?
Honestly, Shery, the demand is something that we can't keep up with. So in fact, it's more about rolling out the infrastructure and getting deliveries on time. I don't think demand's the issue. And we only place orders on the back of demand. So it's sort of quite assured when we roll these out.
To your point, that was a case that NVIDIA was making with its results this week, that it's not a matter of demand, it's a supply chain issue, which is why we're now hearing that they could raise prices by about 15% or so on some of their products. Are you seeing the impact of that?
Well, the announcements just come in. And as you know, in terms of whatever orders we had placed, those were already on past pricing, and those contracts were already sort of all pre-done. On the new contracts, we're waiting to get new pricing right now, but that will be passed on to customers, obviously, as things move forward. So that impact's certainly going to happen. But irrespective, demand is extremely high.
Do you expect customers to be able to take on this extra burden? And are you looking at any alternatives because of the pricing at this point?
Shery, I think, the truth is we only order what the customer wants, right? Or the customer needs, the customer demands from us. And right now, irrespective of what you buy, I think the price increase is not really, created by NVIDIA trying to get more margins. The truth is that memory pricing and many of the component pricing has shot up. So they're also passing on those pricing back to us. So right now, there is no demand reduction as we speak. Conversations are live, conversations are heavy, demand is through the roof. And, one must understand that a lot of data center AI demand is sort of global compute demand. It's not local to India. India is a good place to provide this because the power infrastructure is good, the talent infrastructure is good, submarine cable connectivity is good. So it's able to provide this right now. And I think until, this explosive boom goes through a bit of a cycle, we still have enough power infrastructure to cater for the next 5-10 gigawatts of AI compute can come from India very, very quickly.
Cost-effective power supply that can actually compete with other regions? Because as you mentioned, if this is a global compute issue, why not Southeast Asia, the Middle East, and other parts where you could get cheaper power?
Actually, Indian power is, we have a fairly extensive blended grid. We have a lot of renewable. We have coal. We have a full mix, a pretty strong energy mix, and for an average cost of power of like 8 to 9 cents a kilowatt hour, as long-term pricing goes, it's very, very competitive. And when you look at GPU costs and with the way GPU efficiency has come in, power constitutes, not more than 3-4% of our overall cost. The main cost is GPU depreciation that we need to sort of plan for. So I don't think power costs is going to move the needle in any way. It's much more about reliable power availability, that's important. And that, along with good talent, good infrastructure. And I think we have enough pockets in India where that's available and can provide it in a good and meaningful way.
How about the need for perhaps localization? If you're aiming to become a global AI cloud services company, could you see the need to localize some of your business and perhaps have more customers coming from overseas as well?
Well, I'm happy to say that this year, so last year, Yotta's book was about 80% Indian rupee customers, 20% dollar customers. This year will probably be 65% dollar in our revenues, 35% Indian rupee. Next year is probably going to be even sharper than that, where it's going to be 80% dollar revenues and 20% rupees. Now, our rupee revenues are growing. It's just that in absolute terms, the global demand and the amount of AI infrastructure we're adding is just multiplying that number out there. So we're certainly catering to global demand and global customers already, and we see that exponentially growing. And listen, we have existing campuses which can scale up to almost 2 gigawatts, and they're in two marquee areas, Mumbai and the National Capital Region near Delhi. So both of those are very desirable, very sought after locations, which has everything. It has power, it has infrastructure, it has talent. So it's a right now a good place for us to be.
Do you have a global versus local ratio target at this point? And what gives you the advantage over other global providers?
Look, I think the truth is one advantage we have is a head start, right? So we started working on an NVIDIA cloud cluster back in early 2024. We localized, built our own GPU cloud orchestration layer that's entirely built by us. And it was a trial by fire, right? You got into it. And today I'm proud to say that our orchestrator competes with the neo clouds, with the hyperscale clouds, and we're able to run a very stable setup. And so I think that's part one. Part two is from a target perspective, it's really sort of it's right now demand is unconstrained. It's about contractually getting it right, financing it right, execution, doing it correctly, and getting these out there. So what we see and what we hope for is that over the next 12, 18 months, we'd like to deploy 400 megawatts. So probably, we have the ability to deploy about $20 billion worth of GPU compute infrastructure, give or take. And we'll see how much of that we can get to.
What will be the runway for you in all of these plans that you have for the company in getting you to that IPO? Because we're reportedly hearing a targeting of a valuation of as much as $6 billion.
Look, I don't want to say much about, valuations that the market will decide when we hit that moment. Right now, it's more about just executing on our growth plans and delivering on them. And right now, we've got really good partners when it comes to what comes, with the local banks, local institutions, global financial institutions, partners who are working with us to fund GPUs. So we're doing that. We are underway in talks, of course, about hitting the capital markets very soon, being listed. But we'll sort of let you know as soon as we actually pull the trigger on that and take that ahead.
Darshan, Hiranandani, we'll have to have you back. Great to have you with us, Chairman at Yotta Data Services. And for more on the trends shaping India's tech sector, visit Bloomberg India, our new digital destination for exclusive reporting, analysis, and video. Subscribers can check it out at bloomberg.com/India. Up next, Lightspeed India's Hemant Mohapatra joins us live to dig into the investment trends shaping the country's tech sector. This is Bloomberg Tech Asia. Well, Welcome back to Bloomberg Tech Asia. India's big AI bet is backed by government incentives and investments from global tech giants as the country aims to become a key hub in the AI economy. Bloomberg's Saritha Rai reports on whether it can translate this massive spending into a lasting advantage.
Indian Prime Minister Narendra Modi is laying out a sweeping vision worth nearly $20 billion to boost semiconductor and smartphone manufacturing as he looks to position the country to take advantage of a global AI boom. The government's latest package includes roughly $13 billion for chips and almost $7 billion for smartphones and electronics. It builds on India's original $10 billion chip program launched in 2021, which drew investments from companies including Micron and Tata Group. The new incentives target areas from chip design and equipment fabrication to research and development. Silicon Valley has its own massive commitments in the country. Amazon recently added another $13 billion for AI and cloud infrastructure. Microsoft has pledged $17.5 billion over 4 years, while Meta is partnering with Reliance Industries on its first AI-focused India data center. Local champions are betting even bigger. Mukesh Ambani's Reliance says it could invest as much as $110 billion in AI-related infrastructure over 7 years. And the Adani Group is committing $100 billion to build data centers powered by renewable energy. Still, India's commitment remains smaller than the semiconductor war chest assembled by China and the United States. Modi has argued that India can chart a path between America's private sector approach and China's state-backed model.
In
the semiconductor world, oil is black gold, but chips are digital diamonds.
With hundreds of billions of dollars on tap from the government and hyperscalers, India is hoping the next chapter of AI innovation will be built at home. Saritha Rai, Bloomberg News, Bangalore.
India's startup ecosystem has also been attracting growing investor interest, particularly in AI and so-called deep tech. India's AI startup funding jumped 58% in 2025. That's according to a report from an industry body. Deep tech, which also includes sectors such as robotics and biotech, now accounts for about 15% of India's overall VC and private equity activity. Our next guest is at the forefront of India's AI investment boom. As a partner at Lightspeed India, he was an early backer of Sarvam AI, one of the country's leading AI startups. And over the last year, more than 75% of Lightspeed's investments have been directed toward AI-native companies. Let's discuss the emerging opportunities with Hemant Mohapatra, partner at Lightspeed India. Hemant, really good to have you with us. I mean, you've watched this India startup ecosystem for years. How has the landscape changed in the past few years? And what have you seen in terms of investment opportunities, particularly in artificial intelligence?
Well, nice to be here, Shery, and thanks for the time. I think about maybe 3 to 4 years ago when AI companies began to come to us and show up in our deal flow, maybe about 20% of the companies were AI, 80% was non-AI. And within the AI category, I would say maybe 80% were more of the infrastructure businesses. We made an investment. We were the first investor in Sarvam. We made an investment in a company called Composio. We made an investment in a company called Portkey, which recently got acquired by Palo Alto in the US. So these were more infrastructure companies. They were kind of closer to the metal. But the last year or two, I think the ratio has flipped. From 20% of our deal flow in AI 3-4 years back, now about 80-90% of our deal flow is AI. So majority of the founders that come to us and knock on our doors are building something in or around AI. And of that 80%, I would say, yeah.
Go ahead.
And of the 80%, I would say maybe majority of the companies are now building at the application layer, which is where a lot of the momentum, a lot of the excitement, a lot of the value has also shifted up.
So let's talk a little bit about the AI sector and the narratives around it, because they seem to be flipping fast. I mean, remember when software was all the rage and so much money went into that sector in the past few years? All of a sudden, generative AI potentially making this obsolete, and you saw that big sell-off. What's your criteria in a sector that continually changes so fast?
I think you cannot invest in a category that you don't understand as an investor. So all of us at Lightspeed are very big AI native investors. We are using AI tools every single day in our own business. I still write a lot of code. We stay ahead of the research segment. We speak to a lot of researchers all the time. I used to be at AMD. I used to design a lot of the chips, the GPUs and the CPUs that are actually powering a lot of this. So, we are fairly comfortable as a firm all the way to the bottom of the layers where power, energy, data centers, chips come, and all the way to the top of the layer where applications and services sit. So as investors, you've got to be really cutting edge or you're on your own and stay ahead of the curve to be able to understand what's really happening at the frontier and invest in the frontier.
As a firm, Lightspeed has also invested in Anthropic, not only Sarvam, right? So you actually have seen both sides of the very different ecosystems. And you, as you mentioned, you've also worked at these different Western companies. What is the differentiator there? And have you seen the AI landscape in India develop in any different way from the West?
Yeah, so India has some very unique challenges. So you're right. We are pretty much everywhere in the world where there's entrepreneurship. We are investors in Mistral in Europe, which is also building a sovereign playbook for Europe. We're investors in Reflection AI in the US, which is building a sovereign playbook for the US. And Anthropic, which is a lot more commercial and global in nature. And we are invested in Sarvam, which is building the sovereign playbook for India, but also going to go more broadly about that. I think India has some very unique challenges. Number one, India is a 2.5 to 3,000 per capita GDP country, and it is really hard to service this country at scale by building software and solutions in a 40,000, 50,000 per capita GDP country. So you have to build something locally to be able to serve something locally, and it's been, I think that's been the bottleneck in India. Second, India is a very, servicey focused country. People are not as sophisticated to use software. So you need to almost walk them along. You need a lot of hand-holding. AI actually is really good at that. So it's an opportunity, but it does require you to build custom solutions quite a lot to really push that into the Indian, into the Indian market. Third, price points have to be lower in India, given the GDP per capita is low. As you know, OpenAI's lower tier plan is much cheaper in India than in the US, and same is true for Cursor. Cursor just launched a $7 per month plan in India, which I think is the lowest in the world. Even though India has the highest number of power users anywhere in the world, so India has to be serviced at scale at a lower price point, and that requires some very fundamental bottom-up thinking, which companies have to do. As an example, Sarvam is building a very voice-first AI playbook for India because India speaks dozens of languages. In fact, there are hundreds of languages and dialects, but there are 25 languages that are very, very primary. And they are building a separate tokenizer specifically on that. And those kind of things need to be thought bottom up to service India. They cannot be bolted on top of an existing solution.
Super quickly, Sarvam AI, very unique. You don't see many unicorns out there in India. What does it take to scale to a global tech giant?
Yeah, so we've been very lucky to partner with them from day one. We have actually two unicorns. One is Emergent and one is Sarvam. Sarvam was a 3-year-old investment, and Emergent was a 1-year-old investment. But the good way to separate the two is Sarvam is much more infrastructure and foundation model focused and goes up from there. Emergent sits at the application layer, which is what I was saying earlier. We are seeing a lot many more application layer companies coming up in our deal flow now. I think, look, Sarvam's first and foremost, our primary goal is to service India at scale for India-specific problems at India scale, at population scale. So we're going to tackle both the sovereign side, where we have a strategy for from central government top down and state government bottom up. So we are going to capture that entire ecosystem for civil and sovereign use cases, including defense. On the enterprise side, which is where majority of our revenue is right now, we got to compete with the global best. We've got to build the best models in performance, cost, and usability, and we are working on that. We're going to launch our 1 billion parameter model in the next 6 months. And then that'll be a very competitive model anywhere globally. And then we're going to go above from there. And if the models are really competitive, they can be serviced out of India for any part of the world, like China is doing really well these days.
Okay. Hemant Mohapatra, we'll have to leave the conversation here. We're running out of time, but he's a partner at Lightspeed India, and we thank you for joining us. And we do have still more ahead for our viewers. Reshaping the global workforce. Millions of India's tech workers fear being replaced by technology. We'll discuss. This is Bloomberg. A study from the Indian Institute of Management in Ahmedabad says 68% of India's IT workers fear AI replacement. That's about 3.7 million people, and we're starting to see the repercussions of the change now. Let's bring in our senior Asia AI reporter, Shery Ahn. Shery, what are we seeing in terms of the Indian workforce and its impact from artificial intelligence?
So India's IT services sector has about 5.8 million workers, and accounts for 315 billion in revenues, growing at about 6% every year. It's a really supercritical sector. But 2025 may have marked a turning point when growth in terms of headcount became flattish. So there is a real impact from AI in terms of particularly in terms of software coding jobs, business process outsourcing, and call center jobs. So India could see all of these types of categories affected unless retraining happens in a big way.
Very quickly, then, what happens to the IT services model that's very, of course, iconic for India?
I think the IT services model will have, which used to be really headcount driven, will have to modify a lot more and get by retraining workers in AI roles like AI and machine learning operations, AI architects, and so on. There is still an opportunity, and most industry executives tell me that there is an opportunity in the AI disruption, because every company, every large enterprise in the world requires retrained AI.
Right. Bloomberg's Shery Ahn will have to leave the conversation here, and that's it for this episode of Bloomberg Tech Asia.